Allow me to bring you on a journey on understanding an area of initial public offerings, which is the stage of a private company issuing shares to the general public for the first time. From acquiring financing to convincing existing shareholders on the prospective survivability of companies, the positive implication of a company surviving longer is that they can signify the ultimate performance of a company, and this will shape a good sentiment for potential investors of the company's future success. However, I found a declining trend on the total listed companies with active status in the Malaysian market since 2006, especially among the main market participants. According to Bursa Malaysia, main market participants' performance is referred to as the benchmark index of the Malaysian stock market performance. So if there's a declining pattern on the number of main market participants listed in the stock market, it also signifies that there is a consistent underperformance of our stock market. Now, this will start to erode the confidence of potential investors like us, discouraging us from participating in the stock market. Now, this is where my study comes in. I suggest that the information on the IPO proceeds, which are the information of how much an IPO company expects to raise, can tell us on how long will a company survive. Now, the information consists of two segregations, which are the proportion of IPO proceeds and the time frame of proceeds utilization. Uniquely in the setting of the Malaysian market, we have the information of not just on the intention of a company going public, but also on how long will the proceeds be utilized. Now, the information can be divided into three, which are the growth opportunities, debt repayment, or working capital. Now, putting ourselves as investors, it is more likely that if a company were to prioritize the growth opportunities, it will give higher return to our investment through the accumulation of a wealth in the growing company. Now, this will give positive signal on the survival period of companies, dampening the conflict of interest between us, the investors, and the management of a company, elongating the survival period of companies. Now, in contrast, a company that focuses more on repaying their debt or for short-term uses like the working capital will less likely create value for the company in the long run, sending negative signal to the survival period of companies, increasing the conflict of interest between parties, shortening the company's survival period. But how do I prove this? With 527 public listed companies from January 2000 to August 2014, I will execute the strategy using the accelerated failure time model, which is a survival analysis that will allow me to identify the relationship between the information of the IPO proceeds and the survival period of companies. Now, let's see if I get to prove that the information of IPO proceeds can in fact influence the survival period of companies. The findings will majorly help the investors in executing and informed investment strategies for potential capital appreciation in the long run. So that is all for me. Thank you all for listening.